Hey Herbert, thank you so much. Get giving time out of a busy schedule. You're all over, man. YouTube,
Thank you so much, Rajiv. Thank you.
all over, man. I really like, and as I told you, when I was waiting for you, I was listening to Cyberbulls. I
Yes.
don't particularly, I'm not a big fan of Gary though, but anyway. So,
Yeah.
just to put that so what's this you and Tesla? What's the
Yeah.
love?
Where's the love? Is that what you said?
Yeah,
um, it's obviously I am somebody who's very, very excited, interested in anything that's innovative. Innovative products is the thing that gets me very, very excited. That's my career. I'm a product manager in software and tech. All of my background's healthcare analytics, but anything that is innovative is something that I'm always one of the very first early adopters of any technology. Gmail, Twitter, Instagram, the iPhone. I would always want to be there. And of course, I'm one of the early adopters for Tesla's full self-driving and so forth. And so what happened was I'm an investor in Apple for many, many years. And as the years go on, I just continue to accumulate my investment in Apple. I just felt that it was the right company. I've been investing in it for 20, 30 years. I mean, 20 or something, I don't know how many years now, but it's like in the 80s, 90s. Um, and the whole Steve Jobs, the Silicon Valley, just absolutely enamored with Apple and Steve Jobs, their approach to creating the best products that ever been made, focusing on the product and making sure that you have this kind of just laser focus on how does this innovate, how does this make something better for their customers. And then so what happened with Tesla was in 2012. So prior to Tesla, I actually invested in a sustainable electric bus that's called Ballard, and they were
yeah.
making these buses that was but in I think it was hydrogen powered batteries at the time because I lived in Vancouver, Canada. They were there. I started investing in them. That company it still exists today, but it failed. I lost my money, didn't make any money. When I discovered Tesla in 2012, and I watched a presentation by Elon, and it just blew my mind. I think what happened to me was when you understand that this is an electric vehicle, that's one thing. Okay. That's great. That makes sense. But then when the explanation goes and says, well, because it's an electric vehicle, there is no need for the engine, carburetors, spark plugs, everything that's in a front engine does not need to be there. The engine itself is the size of a shoebox. And so now, because of that, the front is all empty and it's a frunk. Okay. It's a trunk in the front. But what that then does is it lets you have a safety, zone and a crumple zone. So then it's just, that my mind blew up and going, okay, so now I don't have to pay for any service, no maintenance. All these parts are removed and it's going to be safer, especially with a heavy battery. And that just made me go, aha, this is not just the fact that you're changing an ICE vehicle to an electric vehicle. This is actually way better than the existing vehicle platform there is. And then that the advancements in combustion engine, it's been around for hundreds of years. They've tried everything they can, but there's a limit to how much invention you can do because at the end of the day, you have to combust a fuel, and that's what happens with this, the physical movement. That's how the car moves. But electric batteries is just starting, and you can imagine at that point that the invention for that and the progress of innovation for the batteries is just starting. And 20 years from now, we will be shocked at the range, at the how fast it'll charge. There's just so much more to continue. I'm actually surprised that today, I actually think it's earlier than anybody expected that we would already be at price parity and we'd already be at range, kind of enough range to satisfy folks. So, that's just what happened. And then actually what happened was at their presentation in 2012, Elon himself said, I'm going to invest $95 million of my own money. And we knew that this company was precarious. It was very difficult. There was he was very stressed out trying to roll out the Roadster. There's problems with quality. So at that time, there was no guarantee this company will make it. But when he said, I'm going to put in 95 million, I said, okay, I'll start investing small amounts of money. And as the years go by, I started to invest more and more. And it's just one of those things where it kind of jumped in 2012 to 13. So I was okay. I felt good about my investment, but then it was flat. 4-6 years, longer. And so that was very frustrating because I was like a biggest Tesla fan. I'm like, that's all I could talk about was Tesla to anybody. And yet the stock did not move. But the company continued to progress. And I still just developed my conviction, developed my love for Tesla. So
Well, I think so. You've been one of the early ones, isn't it? I mean, it's not that you came on a journey when it became 5 times, 8 times, because there are a lot of Tesla bulls who came when it became 5 to 8 times and then it became bulls. So in my view, they are not really bulls. They're just opportunities.
I think we're all bulls, but yes, I am a risk taker. I like to find these companies way ahead of time, and I only like to focus on companies that I think are, like innovation engines, right? That's what I see as Apple, right? Apple wasn't just a phone. First of all, they were a computer company, and then a computer company became a music company, right? And then that became a phone company. And so it's not like they're going to stop there. They're going to keep inventing as they move along, especially if Steve Jobs had continued on. And you can see that that's what Tesla was all about, right? Elon Musk is literally 10 times probably better than Steve Jobs. I mean, this is a once in a generation human being of just intelligence and genius, but also execution, the ability to focus and make things happen. When you see something like that, you want to invest. And so, yeah, I was earlier than most people, but just like everybody else, you accumulate and you build your conviction. It takes time. And then you realize, okay, 2018, 2019, this company could have gone bankrupt
Yeah.
very
That
easily.
was such a scare, huh?
So there was no, and so when they started buying after 2018, when the Model 3 came out, and then the company is much more stable ground, then that's perfectly great. That was actually smart to have done that. It's not actually smart to, been much earlier, but yeah.
And what needs look, I mean, and I know it's a bit stale and it's a bit late to talk about earning call. I heard it when I was gymming, and I think it was. What's your feel like? Well, I think my
Yeah.
favorite quote remains, "Oh, Optimum is doing great. It can walk now, and then it's going to do yoga next year." I mean, he was
Yeah.
being hugely fucking sarcastic. And
Yeah.
I think if you don't know Elon, you can be really pissed off with the call.
Yeah. So let's see. Here's how I answer that. So clearly, it was disappointing for most people who watched it because normally in an earnings call, Elon would kind of be very realistic about what's happening with the business, but at the same time, he would always say something very positive about certain parts of the business that gets everybody very, very excited. There was always that balance. He did talk about the bot being able to do ballet. He did repeat that the robo taxi, when it becomes available, will be 5 times the usage and it'll grow. He said the energy is the largest margin and that will grow as well. Uh, and of course, AI. But when he said it this time, just the way he delivered it was very flat and it didn't take. And so people just focused right on to, the things that look like that sounds bad, which is Giga Mexico. We're going to slow that down, even though they spent so much time talking about we're going to expand Giga Texas. And yet people felt that the Giga Mexico being delayed is a signal. And then, of course, he certainly spent way too much time talking about the interest rates and the,
Macro.
preparing for negative things. I will say this, though, if you look at the earnings call from Q1, Q2, Q3, there's a pattern. And in Q1, I've been saying this so much in my shows, and I pointed out that in Q1, if you look at the questions from the institutional investors, there's 3 questions on Q1 about energy, and then in Q2, there was 3 questions about AI, and then in Q3, there's 3 questions about robotaxi. So him coming on the call and just repeating that we are not just a car company, it's working. Like you can actually see this happening. And so, the institutional investors, like other retail investors, they're starting to realize that this is, it's starting to seep into their minds that these things are happening. So for that, I'm very, very happy because I can see that, okay, he's really explaining to folks what's happening, they're understanding and they're repeating what he says. So I think the bad thing about what happened in Q3 was he absolutely removed anything that was the kind of any of the short-term catalysts, right? Anything that you can hang your hat on and say, this company is going to grow in the next 6 months, a year. He basically said it's going to be a flat earnings. Cybertruck will take a lot longer than we need to do to roll this out. Energy could be lumpy. It may not come all at once, as we said, even though it's growing and it's great, but it's still small compared to everything. And then he just warned of a potential slowdown in the market if the interest rates stay high. And that's why they're shoring up their cash. So for that reason, I mean, that's why the stock fell big time. But for me, I always look at it from just the key things, right? This company is dominating electric vehicles, and they're going to continue dominating electric vehicles. They still kept their 1.8 million forecast. Yeah. So for me, I'm fine. I'm very happy. I'm okay personally with the margin compression with price cuts in order to keep the 1.8. And then there's progression of the bot. There's now FSD 12, which is a revolutionary step change in technology that now many people can now see why robotaxi could actually happen in the future. And energy is now a significant, like 9% of revenue, and the most margin. And so why, like at the end of, step back and go, look, the story for the stories of these big things that are happening are all moving forward, and maybe a slowdown in cars, but it's not really slow down in cars because we're still going to hit the 1.8. And so for me, it's like, well, it's just margin. It's just PE ratios. It's just stock that people were afraid of. But fundamentally, I think it's still very, very positive.
One thing, look, I got interested in Tesla 2 years ago, Hubbard. So I don't call myself a bull at all, and I don't dare to, because, bulls are people who can see the future and go through thick and thins and whichever way. I think I love the way you talked about Elon and his genius, not in just terms of conceptualizing the product, but execution, right? Because strategy is important, but if there is no execution, you're zero. Sometimes I think that the institutional investors are pretty stupid.
Yeah.
And very short term. They want to see what's happening in 2024. Are they investing in a bond, or they are investing in a stock, or they're investing in a disruptive technology, I'm not sure whether you think the institutional investors don't get this company, do they?
No, I don't think they do. And this is something I learned from Brian Feroldi, who's a financial
No, he's been on my show. He's been on my show.
Has he? Yeah, I love this guy's amazing.
I know him very well.
He calls it demystify finance. He creates these charts and graphs.
Yeah, no, he's amazing.
And I interviewed him also.
Both Brians have been on my show.
Both Brians. Okay, so yeah. I actually not been the second Brian. So Brian Feroldi, he then said, okay, if you look at Tesla's, there is this thing he calls the business cycle framework, right? Mm-hmm. That businesses are either in a startup, they're in the growth stage, right? They're in the operating leverage stage, and there's like 5 or 6, and there's a beautiful chart that does that. And the auto business is in the operating leverage stage, right? They're already existing, they're already selling, they already got profits, and now they're trying to maximize their margins. Okay, when you're in that kind of a business, then the proper way to value that business is through a PE ratio, discounted cash flow, future earnings, and it's starting to get to mature, right? And it's starting to go there. Well, there's 2 issues here, right? So one is Tesla's a car company, but it's just at the beginning because there's a revolution in electric vehicles. And they're going to kill a lot of ICE cars will be dying while EVs are growing. And so that, while it's kind of like people go, oh, it's mature already, and I can already predict you earnings. Great. But what institutional investors have not yet valued is the fact that Tesla has 4 startups in it, right? Bots, energy, AI, robotaxi.
It's on continuous It's on continuous S-curve. There are different
all of these are at the startup stage, but all of them have massive potential S-curves, and they happen to be the largest market cap businesses in the world. Energy is like the largest, right? AI is the biggest thing that's ever going to happen. Bots, and yet they don't give them any valuation to it, because they think that, well, until you show me a product, and then you show me the revenue, then I'll put money in. Okay. So they're kind of that way, but I'm like, no, in order to play the stock market, you want to invest before that event happens. And so now it's your confidence level. And the beautiful thing, there's 4. And so if just one of them succeeds and the other 3 fail, you're still going to be just fine. And this is just what it is today. 2 years from now, there's going to be another thing that Tesla's going to say we're now in this business.
I
And
think
so, because they're an innovation engine, that's
Tesla
what
is
they
too
are at the end of
fast
the
for
day.
them to understand. They are, I think, institutional investors started loving Apple after Steve Jobs left, isn't it? I mean, when the story was
Oh,
done, and you know,
I'll tell you this. Yeah. So when Apple, I was investing in Apple for many years. Every time I invest in Apple, it's always the all-time high. Think about that. Because then it gets higher the next year. Then it gets higher the next year. Or maybe there's a lumpy year, whatever. So when Warren Buffett invested in Apple, and I don't remember when it was, 2012, I think it was.
no, I think
I was shocked.
14 or 16.
2016. I was
Around there.
shocked because he was late. We all were saying, why aren't you investing early? And he waited till that time. And we're all like going, why would you invest now when it's already skyrocketed? The iPhone was introduced 2007. The iPhone 4 was 2011. The App Store was already out there. It was already proven. It's already generating a significant amount of money. And yet, guess what happened to him, right? He still made out like a bandit, right? He was like 10x his money. He's like the biggest gain he's ever had. But it was at the all-time high. And certainly for me as an investor many years ago, I'm going like, oh, wow, you're investing now? You know what I mean? And so that's what's going to happen. These institutional investors will wait until that moment and they go, okay, finally, it's a bot company. Fine. Meanwhile, like you've missed the big jump. They'll still do fine because the company's going to continue to grow. But I'm trying to really get ahead of the
That's the
curve.
thing. You know, Warren Buffett obviously. I mean, I've got no authority or I'm in no place to even talk about the great man. His wealth
Yeah.
speaks for himself, right? But I think a lot of these people put their money in predictable businesses.
Yeah.
You see, the whole of DCF, your discounted cash flow model, is based on
Yeah.
predictability, right? Now, if you do not know how the bot will grow, how much bot will grow, what kind of addressable market it can have,
Yeah.
energy business, nobody knows. I mean, how the world will expand, right? And I think it's the trends, right? So I think their institutional investors, Warren Buffett kind of investing is more into predictable businesses, not into disruptive businesses. I think what Cathie Woods has done has come and changed the landscape a bit, but it's a bit, surprising. I looked at Cathie Woods. The results, man, there's horrifying. If you look at the stock prices, man, now you'll get a heart attack. There's some 70% down, 60% down. But I think his Tesla story has been so. I think it's a kind of a mindset. What you want to invest in, what you're comfortable with, and I kind of don't blame them. But when they say themselves authority, and when they start telling, oh, Elon should behave this way, and look, I'm not a fanboy. I'll try to be objective. He should behave this way. He should behave this way. I mean, you guys are, what is the world's richest man for what? For no reason? I mean, give me a break. Anyway, now, what I think both Brians have started something on valuation, because earlier Brian Feroldi is ex-Motley Fool, and I talked to him about the valuation. He was the second guest on my show. I started it.
Wonderful.
He was second guest.
Nice.
And then he talked about his valuation, and he said that Motley Fool doesn't believe in valuation. I don't know whether they've changed or not. They've the simple philosophy: 25 stocks, 2 decades. But the problem is that most of these businesses or most of these investors did not see a bear market. They saw a market with money was flowing in, Fed was printing, and they said macro is not important, and now everybody's fucked, right? I mean, you kind of a 50% decline in stock price. I mean, if you put your savings, it's a lot. So both brands have come out with a valuation framework. I still have to talk to them because I was busy and I need to read it also. Well, what's your valuation philosophy, Hubbard? I really want to know, because you are a startup lover, you are a disruptive business investor. What's your philosophy on that?
So I'm a long-term buy and hold, find a generational company. It took me a long time. It's not like first, I don't think that you should just be one company, but this idea that you should just have a handful of companies is the right way to go. So what happened, like most people will do, and of course, you have to preface this by saying, depending on your age, depending on how much money you're making, depending on all your situation, that all makes the sense. You need to buy a home, you need to have cash on hand. Then when you have money to invest in stock, that's the part that I'm talking about, right? Okay. So initially, I would go and pick stocks. So of course, the first step is to invest in the NASDAQ or a ETF or something like that, right? The mutual funds and all that. That's a safe way, and you will make money. Then I was in growth stage. I was younger. And so when I was really young, I made major bets. I made bets in these biotech companies. They all failed. I didn't make any, I didn't make my big jump, you know. I almost did with a penny stock, but they, you know, I was very willing to take a risk. Now, as I got older, you start investing and you realize, well, I want growth. I don't want just 10%, 15%. I want to see if I can double X or 5X, right? And so then you start picking your stocks. Now I had like 10 stocks, right? I had Johnson & Johnson, I have Amazon, I have Costco, and Apple. And then as you watch those stocks, you realize, you know, they all grow because it's a, you know, it was in growth market, but your Costco's and your Johnson & Johnson, so they're just, you know, small amounts. And so what happens is your growth that you were making is actually been muted because you have some others that were flat, you know, because you have a basket of stocks. And so just over time, I would sell this and I would buy my big winners, which is Apple. And the next thing I know, after a decade, you're going, oh, I'm overweighted on Apple. Then when you're overweight in Apple, you pause and go, okay, is this a good strategy or bad strategy? And I go, well, if you think about it, and I look at any company I want, which one is that has the which is the safest stock and the stock that can actually grow the most? And it turns out it's the same company. Like Apple, in my mind, was actually a safe investment. Other companies could possibly grow significantly, but like I failed with my biotech investments, they could go out of business. I could lose my money. And I needed to put something in that I felt was a safe business. Apple was doing dividends at that point, stock buybacks. They'd already cornered the market. They already succeeded. And so you feel like, okay, the chances of that to fall maybe 30% very easily. To fall 50%, maybe in a blue moon. To fall 100%, probably not likely. And so I felt safer, surprisingly, like it's a counterintuitive. And then yet the chance for it to grow 30% versus a Costco, or which is a great company, by the way. So I just slowly moved into that. Then when I think of Tesla, I think it's actually even more safe and even 10x and 20x potential at the same company. Why do I think it's so safe? Because of the fact that they are diversified. So let's assume that the auto business fails. And the only way I think that the EV business for Tesla could fail is that if another company releases robotaxi and Tesla is not able to. Let's assume that happens, because Elon will tell you if car company sold you the ability to go robotaxi, but yours can't, it doesn't matter how great your car is, everybody's going to buy the full self-driving one. Let's say that happens. Okay, so now you got your stock in this one company, it will fall significantly. But by the time that happens, this could become an energy company, it could become a bot company, it could become an AI company, and so now you still have this fail-safe kind of bottom, and then but it's not going to be 100% of my money gone, right? And so I feel like it's a safe investment. Now, what's the potential upside? Significant, right? You can, if bots work, you're talking 20x, right? If energy works, energy is going to become equivalent to the auto business. So where we're at today, and we're all complaining about cheaper margins, cut price and all that, but energy itself is going to be where we're at today in 5 years from now. So by that point, it's like, why are we even worried about, this small bit? Now it depends on your time frame. If you're worried about this year, so you're certainly correct. Next year, you're correct. But if you're worried about 5 years, 10 years, energy itself will be as big as this now. Somebody was pointing out to me by 2030, the supercharger business by 2030 is going to be equivalent to the auto business we have today. And so
no, I get one thing, what I keep telling myself, and that Warren Buffett invested in Apple because he said that he was so impressed with the company that it's not a phone company, it's a services company, And after he started investing, the valuation, the paradigm shift happened on Apple on valuation. Now, if that is a problem, because for Tesla, people keep thinking it's a car company. If the car margins are coming down, then the margins on robots will be huge. The margins on a robotaxi. So it's a services company or a robotic company from that point of view, and people don't see that. So that is where there's a bit of disconnect. And the Elon's personality works with people like you and me, where it doesn't cut through with a lot of other people who believe in very linear who are very well mannered. I'm not well mannered at all, and I've lost a lot of promotions in my corporate job because I'm not well mannered, and
You're aggressive, but you got to go forward fast. Yeah.
I mean, and you don't mince words, right? You don't take commands which don't work. The bullshit means bullshit,
Yeah.
right? Now,
Yeah.
very good to know, and I'm just wondering why didn't I talk to you earlier, because I'm getting such a fresh perspective from you, Herbert.
Oh,
What do you think about this price cuts and all that? Do you
yeah.
support them, or you kind of?
Absolutely. Absolutely. I support them. It's funny. I mean, obviously I have this debate with Gary
Mhm.
Black and the people who have been complaining about advertising.
Yeah, I
So
think that's
I'll
something I want to ask
I'll
you. What do you think about
let
that?
me do this very quickly because I know that this conversation has gone back and forth so quickly. Okay.
Okay.
Every company should be advertising. Educational advertising should have been happening for Tesla. There's no reason why they should not have done advertising early on.
Yeah.
What my concern,
Hmm.
what my debate is with these people is that they are suggesting that advertising in lieu of price cuts. When January happened of this year and Tesla did 20% across the board price cuts for Model Y and so forth, the price of the car was $66,000. And they were complaining, why are you cutting the price? You should have been advertising like crazy. That was ridiculous. They had to do that because of interest rates and the monthly payment that the folks have. Now they're saying, why aren't you doing advertising when the price is at $44,000? Now I agree, you should be advertising today. What
Okay.
bothers me is they go, see, I've been saying you should have been doing advertising. No, if we had done what you had suggested in January to not have done any price cuts, you would be at $66,000 today with the interest rates the way they are and the monthly price ridiculous. You would not have to hit the volume numbers. Instead of 1.8, we'd be 1.4, 1.5. And then you'd be going, we need to do more advertising. That's my thing about that, right? Price cuts was necessary because of the interest rate environment and the people can't afford it. We're talking about a massive macro environment globally that we are in a depressed situation right now. And so it's just amazing that the company's still at the 1.8 volume mark. And so we took a hit with margin compression, took a hit with the stock. Certainly that was a big deal. But guess what's going to happen next year when interest rates actually cut and we start moving forward? We'll recover from this. And so why are we worried about a 1 year, 2 year reduction for the people who care about their stock in the next year? And there's a lot who, I'm very sympathetic of the people who invested this last year and need the money this year. I get you. You're right. This is upset.
Then they
But for
shouldn't be
people who are
investing in
long
stocks.
term,
They shouldn't be investing in stocks.
you got it. I agree with you. Tesla is not the one to invest if you're trying to play a year, 2 years. If you're trying to pay a long thing, then this is a safer bet. But if it's short, look what happened to the stock, right? And fell significantly. So, anyways, I think price cuts was necessary. And then I try to remind people that the price of 66,000 was artificial. It only went up there because of the supply chain shock that happened with COVID. And the price today of Model Y and Model 3 is the same as when each of the cars were first launched. So it's not like, and we need to get to price parity. And once you get to price parity with ICE vehicles, you should go crazy with advertising to tell people this is now cheaper than getting a gas car. You don't do advertising and say this is a safe car, and yet it's $66,000 and you can buy an equivalent ICE car for $20,000 less. Look how safe this car is. That would be dumb in my mind. You got to get first to price parity or even cheaper. Now go crazy with advertising.
No, I think, look, I don't know whether we're connected on LinkedIn. I try to post something on LinkedIn time to time, what I like. And I was kind of leading through Tesla and I looked at Elon's vision statement, I think 2006 or 2005, where he says, don't tell anybody. He
Yeah.
wrote, and
Yeah.
it's clear, right? Make luxury car, earn money, invest, make cheaper car, make even more cheaper car and sell more. And I wrote it, posted it simply on LinkedIn saying that, look, the vision can be that simple. And the execution, look at the execution, is more or less line. Even in 20 years down the line, he's trying to reduce. And nobody's talking about the unit cost decline. Is I think a couple of $1,000 this decline, right?
Yeah.
Nobody's talking about that. Everybody talking about price cuts. So I think these topics will not have, they will polarize people. He's a polarizing guy. It's a polarizing brand.
Yeah.
So for me, I think I don't know what to make out of it, but I think more or less, you know, I'm a branding disciple, you know, and
Yes.
so from that point of view, I've been following a lot of branding gurus on LinkedIn because that's my area, and they're talking about that you can charge more premium if you build brand, if you're differentiated and all that. But I don't buy that view. I think I'm more in favor of price cuts, but not in terms of continuous price cuts. But yeah, what is the thing you said that you were early? I still have 10-15 minutes with you. I'll leave you right
Yes.
on your time. Don't worry.
Yes.
It's about
Yeah.
9 more minutes I have. I'll take 5 more minutes and done. Talk about your experience with robo taxis. You said that you've been a adopter of robo taxis and the
Full
autonomous
self-driving.
driving and
Yeah.
full self driving. So you tried on yourself, and how did it work?
Of course, yeah. When it first came out, full self-driving beta was available for us consumers to buy, Tesla owners to decide to do it. I had to be one of the early ones. I wasn't able to get in until I think I'm within the first 3,000 people to try beta. And again, it's just one of those things. I think we're witnessing history in the making. The things that we're doing now, years from now, it's going to be the point where we're going to look back and go, you know, at the time that we were doing this several years ago, and you ask somebody, what's the chance of, this thing called autonomy where a car will drive itself? 99% of people will say it will never
Um,
happen in my lifetime. I
yeah,
cannot see a car ever driving
it's just a
itself,
dream.
ever.
It's a dream.
Just a dream. Now, today, if you ask that question, I think you're probably going to be around 50% of people will say that. And in about 6 months from now, I think you'll only have 25 people say that it will never happen in my lifetime. And it'll just continue until finally it's like, oh, it's here. I always knew it was coming, but I needed to be one of the first people. And I think the way I put it was there are what? I don't know how many people, 7.5 billion people on this earth. And I'm like that's one of the first 3,000 people to actually be testing the early version of full self-driving of where it's going to be. And it just, I don't know, that's what gets me excited. I love that, right? And seeing something develop. And I want to be the first early adopters and just fun. So I did it, and I did everything I can to get full self-driving. And the very first experience was already mind-blowing. Very first experience was amazing. It did 3 issues. It could not handle a five-stop way. But the thing that it did so well was it saw a bicyclist and it was able to go around the bicyclist. And so, that's what's 2.5 years ago. And so clearly it's been slow progress as you go. But if it can solve one edge case and then it can figure out they can't do that anymore, then at that point it's just a matter of time. And then you know that this is solvable. And so at this point, there isn't a single, autopilot expert out there who thinks that this is not solvable. It's now a debate of time. And then because of FSD 12, 100% neural net instead of it being heuristically coded by developers, now they say it's no longer restricted by code, it's restricted by capacity of compute. And so now, if they can afford to build these supercomputers, all the edge cases will be solved. Not all, but of course, enough to make it safer than a human, 5 times safer than a human, and eventually 10 times safer than a human. And so we're there. We're pretty well there. Like, this problem is no longer a problem. It's just a matter of time for it to solve the final edge cases, as opposed to, let's say, a year ago, they still did not know if they were ever going to be able to solve this problem. So
No, but like when you test autonomous now, you
yeah.
you feel confident, you feel a significant improvement there in the way the car.
So I'll tell you that I'm a beta tester, but I'm not one of the beta testers that uses it every single drive.
Okay.
And so when I tell people that, they are like, "What?" Because other beta testers, they will tell you that I cannot stop myself from using it. Why don't I use it every day? And because I test it when a release comes out, I want to see how it improves, but it's not yet to the point that I feel for me that I want to use it instead of me driving. Why? Because it's just there's a few things that it'll still make a mistake, and it's a little bit slower. I know that it's getting closer and closer to becoming a safer than a human. I'll tell you, this is my measure of when I will use it all the time. My measure is when I feel like it's actually it using it with it on, supervised with me driving, I'm safer than if I don't have it on. So, for example, autopilot, on highways. I always use it now. And I
Okay.
can't drive. I go to Vancouver and I come back home, which is I'm Seattle, and I go to Vancouver quite often, once a month or once every 2 months. I will always turn on autopilot because it's actually safer. Like I'm driving and I know that I won't, if the car in front of me stops suddenly, I've got this extra help to make sure that I will brake if that even happens. I feel so much more relaxed. I don't have to worry about my pedals and I can look around a little bit more, right? This FSD 12 for city driving, we're almost there. So if the car is about, going to turning a left, and so what do, right? You look to the left and it looks like it's clear, no crosswalk, and then you look to the right to make sure the oncoming cars. Then you look to the left again as you're making a move, right? With FSD 12, I feel safer because I know that if I look to the left and then I look to the right and the car's already moving, I go, okay, FSD 12 is here. So if there was a person crossing the walk or somebody driving, and then I'll look, but I know that I've got extra eyes. We're almost to the point where I don't want to not have it on because I'm going to be safer if I have it on than not. And we're almost there. So, but FSD 12 has changed the game. And so for me, once FSD 12 comes, that's the one I'm going to be using every time right now instead of the 11.
Very, very sensible answer. Very, very sensible answer. Now, two questions and one very small one, parting thoughts. You open to talking about your average price for Tesla, or is that something you don't talk about?
I don't do price targets. Is that what you're talking about?
No. Like, what's your average price target, average price for buying Tesla or your Tesla holdings?
Oh, yeah, no, I don't share my details of anything like that. There's times when I bought the stock a long time ago, and then there's times when I bought it when it was at, I transferred my money from Apple to Tesla when it was still high, but I'm still way above where, my cost basis at the beginning. I personally don't even track it myself. I don't even know how many shares I have because it's one of those things that I just put in there and I close my eyes and I'm going to look at it later.
I mean, the coffee can portfolio, they call it, right? But anyway, last question, 2030, like it's 1 trillion almost now, or maybe I think just keep fluctuating. People have this love for it's a 1 trillion company, it's 2 trillion company. I think trillions wouldn't mean much 10 years down the line. That is my thing, right? Can it go 10x, 10 trillion, 15 trillion? Is that by 2030? Or 5 trillion? I think Elon himself said Apple plus what Aramco.
Yeah. So Elon just a few days ago said that 4 trillion. Ron Barron was being interviewed very recently, just last week, and I did a show on it. And he said that he sees that Tesla is going to be able to hit the 4 trillion market cap by 2030. And then Elon replied to that tweet, and he said that that I think we can hit that if we hit it out of the park a few times, a few things that we want to happen if we hit it out of the park. The way I'm looking at it, it's like, again, I don't do price targets.
Yeah.
If somebody asks me and forces me to, then I'll try to come up with it. But I'm
No,
not one of those
you don't
people.
need to. I mean,
Yeah,
I'm just trying to
no,
get your.
I'm saying that there has been times that I was quoted saying some number, but I personally don't do that. Right? I'm just basically knowing. So again, if you look at my background, I'm a startup guy. I'm a product guy. I just look at the business and I look at the product, and then from there, we're winning in EVs. And so we're going to own 20% of the market at the minimum by 2030. Then you know that there are going to be these other businesses. You see energy now coming together, and then you can calculate forward how many that is, and then the other businesses. So it's almost like I do. The reason I'm invested in this company is I do expect it to be a 10x.
Okay.
That's why I'm doing it. Like I'm not going to do a company at 15% growth each year, but I want to invest in a company that I think is very safe, but has a potential to 10x or even 20x. And at that point, it's all like this. There was a wonderful tweet that somebody put out that says, it's weird that if you're somebody who believes that Tesla will do a robotaxi, and that if you actually have conviction that it's going to do robots, then why would you not, at that point, why would you not have a price target that is 10x or 10 trillion? And that kind of is a true statement, but I just personally don't want to even try to make claims or put dates. It's like, just focus on the product. Are they making progress on the bot? If they make progress on the bot, can they sell the product today? Yes. They're not going to sell it. They're going to use it in their own factories for the next year or 2 years. They're going to use it for their supplier factories. I'm not even thinking about retail sales, the consumer. This idea that they're going to sell the bot to you and you're going to have it do laundry and dishwasher. That's, you don't need to even think of that. Don't
Yeah.
even bother. Just think factory. Just think pick and place. Just think, just grab something from here and put it there. That market alone is trillions of dollars. So let's not try to worry. I'm only going to make money on this if this thing can fold my laundry. That's not true. Anyway, so the bot is a real business. It's already happening. And so why wouldn't this 10x? And it's just a matter of time. So then it's just restricted based on how good of a manufacturer is Tesla, how can they scale fast, and there's no other company that can do this at this scale. So I'm very comfortable.
Amazing. Look, very fresh perspective, Herbert. I really appreciate your time, and I'll let you go now because you're so running a busy schedule. Wish you all the best with your YouTube channel. It's going to rock. I see this, you kind of subscriber count has really grown up last time when I saw, and it's amazing to chat with you. What a fresh perspective, and wish you all the best, Herbert.
Thanks, Rajiv. Appreciate it. It was fun.
Good evening.
Okay.
Take care.
Bye, everybody.
Bye.